Index funds versus ETFs. What's the difference? Welcome to Wealth Wisdom. If you have ambitions to achieve financial success, please leave "yes" in the comment, and we are here to help you obtain insight and build wealth. In today's video, I'm going to break down the key differences, pros and cons, and help you decide which one is right for you, especially if you're just starting out. Stick around to the end, where I'll also share a simple strategy I personally use that combines the best of both. Let's get started. What is an index fund? An index fund is a mutual fund designed to replicate the performance of a specific market index, like the S&P 500, the Nasdaq, or the Dow Jones. Let's break that down. If you buy shares in an S&P 500 index fund, you're basically buying a tiny slice of all 500 companies in that index. That means you're instantly diversified. You don't need to pick stocks individually. Index funds are passively managed, meaning they just follow the index, no high-paid fund managers making bets. And because of that, the fees are super low, usually around 0.03% to 0.10% per year. In short, an index fund is simple, cheap, long-term investment. What is an ETF? ETF stands for Exchange Traded Fund. And here's the key difference. While an index fund is a mutual fund, an ETF is traded on the stock market, just like a regular stock. That means you can buy or sell it throughout the day at the current market price. You need a brokerage account to trade it. And you can use advanced strategies like limit orders, options, and even margin, if you're into that. Like index funds, many ETFs are passively managed and track a specific index. So yes, you can have an S&P 500 ETF that functions almost exactly like an S&P 500 index fund, but it trades like a stock. So think of ETFs as index funds with flexibility. Similarities between index funds and ETFs. Let's talk about the similarities, because they're both awesome tools for long-term investors. Both are diversified, spreading your money across hundreds of companies. Low cost, fees are usually much lower than actively managed funds. Passive, no stock picking, just tracking the index. Great for long-term investing, ideal for retirement or wealth building. So if you're wondering, which one grows my money faster? The answer is, they often perform nearly identically. It's not about which one gives you more returns, it's about how you prefer to invest. Key differences. Now let's dive into the real differences that matter for investors. 1. How you buy them. Index funds. You buy them directly from mutual fund companies, like Vanguard, Fidelity, etc. ETFs. You buy them through a brokerage, like Robinhood, Wealthsimple, or Charles Schwab. 2. When you can buy them. Index funds. You buy, sell once per day, at the end of day price. ETFs. You can trade throughout the day, like a stock. 3. Minimum investment. Index funds may have minimums, $500, $1,000 or more. ETFs. You can buy fractional shares, invest $10 if you want. 4. Fees and expense. Both are low cost, but ETFs may have slightly lower fees in some cases. Some brokers also charge a transaction fee for mutual funds, while ETFs often trade for free. 5. Tax efficiency. ETFs are generally more tax efficient. Thanks to the in-kind redemption process, ETFs generate fewer capital gains. Pro tip: if you're investing in a taxable account, ETFs might save you a bit more at tax time. Pros and cons. Index fund pros. Easy to automate. Great for long-term investors. No trading required. Hands-off investing. Index fund cons. Less flexible. Trades only once per day. Minimum investment required. ETF pros. Real-time trading. Lower minimums. Tax efficient. Can buy fractional shares. ETF cons. More decisions to make, when to buy, sell. Requires a brokerage account. Slight learning curve for beginners. Which one should you choose? Choose an index fund if you like automation and simplicity. You're investing in retirement accounts, like 401k, RRSP, TFSA. You're using providers like Vanguard or Fidelity and don't want to trade manually. Choose an ETF if you want flexibility and real-time control. You're using a mobile trading app. You're building a custom portfolio or want to keep costs ultra-low. Honestly, both are excellent. The most important thing is to start, not which vehicle you pick. Final thoughts. Index funds or ETFs, either way, you're doing the right thing by investing in the market instead of trying to time it. If you got value from this video, give it a thumb up, subscribe for more content like this, and drop a comment. Which one do you prefer, index fund or ETF? Thanks for watching, and I'll see you in the next one.